Hello students, hope you all are well. Let us start our next video on the basis of Elements of Accounts Part 1 of Standard 12. The previous video I told the theoretical part of Chapter 6, which is called the retirement or death of the partner, and also I explained about this chapter, some of the introductions, what is going to do in this chapter, what you are going to learn from this chapter, and theoretical part also I explained. Practical points I told you the previous video that the total 6 steps are there, one by one. All these 6 steps of page number 217 or page number 217 on the top, the third point. Under the third point you are having all the 6 points. All these 6 points are the practical 6 steps are there. Out of that first steps previous video I explained. In this video I am going to explain the second steps, which is called the valuations of the goodwill and its accounting treatment. Once again I want to repeat, in this video I am going to explain the second steps out of the 6 steps, the valuations of the goodwill and its accounting treatment. Always I want to compare what you have already learned and what you are going to learn. You have learned from the previous chapter, that is 5th chapter, admissions. The accounting treatment of the goodwill, you have seen that one. 2 type of treatment was there. One, the new partner is bringing the cash, for that what is the journal, and second one, if new partner is not able to bring the cash, the another journal for accounting treatment of the goodwill. But here you see that old partner is leaving the business, so old partner will get some extra amount for the goodwill which existing partner will give. Existing partner, that means no one will bring the cash here. Here the very simple, the one thing you will keep in mind, the who is leaving or going to retire, his capital account will be credit, and who are existing or continuing the business, their capital account will be debit. This is a very simple for accounting treatment of the goodwill in this chapter. Continuing partner capital account will be debit, retiring partner capital account will be credit. Continuing partner, suppose there are the 4 persons are there, A, B, C, D, and one is leaving, that does not mean the remaining 3 will be debit. I will find out first the gaining ratio. Who are gaining his share, their capital account. That sentence very important. That sentence you keep in mind what I am telling. Who are gaining his share, their capital account will be debit, and who is leaving the business, his capital account will be credit. Once again, who is leaving the business, his capital account will be credit. Who is gaining his business, his share, their capital account will be debit. First of all, if already in your business some of the old goodwill is existing, old goodwill आपका business में होगा तो, if it is there, then you have to write off this goodwill, and for that the goodwill account will be credit. They are all partners capital account debit to goodwill. This is which one? This is if already in your business some of the, in your balance sheet asset side, some of the amount goodwill it is existing, then that goodwill account will be credit, and all partner capital account according to the old ratio. This is not compulsory. If it is there, then you will do. If it is not there, this transaction no need to pass. But this transaction is most important. That is, who is continuing or who are gaining. Maybe out of the 4, 3 are continuing, but out of these 3, 2 are gaining. So I want to tell you like that, you keep it in mind. The continuing partner's capital account or current account will be debit to returning partner who is going to retire. This is only one journal, you will keep it in mind, accounting treatment of the goodwill. Let me explain one question so that you can understand. From your textbook only, I want to explain the illustration one by one now. Then next video I will go for exercise question when I will do the practical sums. ICWA. Do you know what is the full form of ICWA? Indian Institute of Cost and Works Accounts. Institute of Cost and Works Accounts. This is Institute of Cost and Works Account. One courses are there, which is called short form is called costing. ICWA are the partners sharing profits and losses in the ratio of 4:3:1. 4:3:1 means 10. 4 plus 3 is 7 plus 2, 9 plus 1. 4:3:1. Who is going? I is going. I share is 4/10. Here you keep in mind. Who is going? I is going. I share is 4/10. Who are remaining? CWA, whose whole share is 3:2:1. From 1/4/16, the balance sheet of the firm shows the goodwill as at 20. This is the first journal. It is given according to your old balance sheet. You are having the goodwill. Balance sheet of the firm shows the goodwill at rupees 20,000 at the time of retirement. मतलब रिटायरमेंट का टाइम बैलेंस शीट में ऑलरेडी आपका 20,000 गुडविल था. दिस 20,000 गुडविल यू हैव टू डिस्ट्रीब्यूट ICWA अकॉर्डिंग टू द old ratio 4:3:1. Goodwill is assets, debit, you have to make it a credit, and this capital account will be debit. What is the next one? The new profit and loss sharing ratio of CWA is 2:2:1. It is given the new profit and loss sharing ratio. This is old ratio, this is new ratio. So when old ratio and new ratio both are given, that time you have to find out the gaining ratio, and according to that gaining ratio you have to distribute. Goodwill of the firm is valued at rupees 60,000. Now when I is leaving, that time they decided that firm's goodwill it should be according to that it is 60,000. So on the basis of this 60,000 you have to find out the amount of the goodwill of I, and that CWA capital account will be debit and I capital account will be credit. And what is given? Goodwill of the firm is valued 60,000 at the time of retirement of I, and write the journal entries for goodwill. So do you understand the questions? Once again I want to tell you, ICWA 4%, 4:3:1 old ratio. I is leaving, I share is 4/10. Which date it is leaving? 1/4/16. Old goodwill it was 20,000. New goodwill it was calculated 60,000, and new share is 2:2:1. You have to find out first the gaining ratio. First you come to the calculations of the gaining ratio, then we will find out, because 2:1 is not the gaining ratio. 2:1 is the new ratio. Now gaining ratio. Formula for gaining ratio, that is new share minus old share. Gaining ratio formula is new share minus old share. Sacrifice ratio formula is old minus new. So gaining ratio for C new is 2:2:1 means 2/5, 2/5, 1/5. 2:2:1. This is 2:2:1. So 2/5, 2/5, 1/5. And this is 4:3:1. So C is 3/10, then 2/10, then 1/10. So if you find out for C, you will get 1/10. If you find out for W, you will get 2/10. In case of A, you will get 1/10. The gaining ratio of CWA is 1:2:1. This is gaining ratio, this is new ratio. Don't be so confused. Now, the goodwill for I is going to leave the business. So I goodwill will be 60,000 of 6/10. Sorry, 4/10. I share is 4/10, not 6. 4/10. 4/10 of 60,000, which is coming 24,000. This 24,000, 1 to 1 in this ratio, these 3 will give. So 21 plus 2 plus 1 is equal to 4. That means 1/4, 2/4 and 1/4. C will give 1/4 of 24,000, which is coming 6,000. W will give 2/4 of 24,000 is 12,000, and A will give 1/4 of 24,000, which is 6,000. 6 plus 12 plus 6, that will be coming 24. So who will give how much, that you understand, and who will give, their capital will be debit, and who will get, his capital account will be credit. Now first journal, is 20,000. This is journal for 20,000. 20,000 is the old goodwill. Old goodwill you distribute I capital account debit, C's capital account debit, W's capital account debit, A's capital account debit to goodwill, that is 20,000. And this the new partner, the partner who is leaving, his capital account will be credit, and the existing partner capital account are according to the gaining ratio, that is 1 to 1. C's capital account debit, W's capital account debit, A's capital account debit to I's capital is 24,000. This is the main journal. This is the journal for the write-off of old goodwill. Let me take one more. The illustration 11. A, M, T and S. A, M, T and S. How many are there? 4. Are the partners of the, this is most important questions. I told you sometime it may happen that, let me read the question, after that I will explain it. A, M, T and S are the partners of a firm sharing profits and losses in the ratio of 5, 4, 3, 2. 5, 4, 3, 2 matlab 9 plus 11, 12, 9, and this is 5, 14. 5 plus 4, 9 plus 3, 12 plus 2, 14. M retained as a partner. Who is leaving? M. The M share is how much? 4 by 14. Do you understand? 5 plus 4, 9, 9 plus 3, 12, 12 plus 2, 14. And M is going, M is the second. The second is 4 by 14. And who is existing? A, T and S. Okay. At the time of retirement of M, his share in firm's goodwill is 35,000. This is the things which you have to understand. The meaning of the sentence. The previous sentence meaning, previous illustration's meaning and this illustration meaning are not same. It is given at the time of retirement of M, his share in firm's goodwill is rupees 35,000. Matlab it is already calculated. He should get 35,000 when he is going to retire for the goodwill. This is the meaning of that. But previous it was given the firm's goodwill. The goodwill of the firm value. This is goodwill of the firm. I want to give trace. Goodwill of the firm is 60,000. Total firm ka goodwill. And this is given that M's his share in final goodwill. M's goodwill this is. So this is M goodwill. This is not the firm's goodwill. That is the main thing which you have to understand. After retirement of the M, the partner A, T, S decided to share their future profit and losses in the ratio of 2:3:2. This is which ratio? New. This is old. So if you find out the old ratio, new ratio, if you do minus, then you will find out the gaining ratio. Now you have to find out the journal entries. So in this question you are not having the old goodwill. So first journal will not come. First you have to find out that one gaining ratio. Gaining ratio, all of you know how to find out the gaining ratio, because old ratio is equal to 5, 4, 3, 2 and new ratio is equal to 2, 3, 2. The gain ratio is equal to new minus old. If you calculate new minus old, in case of A you are getting minus 1 by 4. Actually A is not gaining, A is sacrificing. So due to change this one, actually A should gain, but A also sacrificing. Yeah. But in case of a T, you will find out 3 by 14. In case of S, you will find out 2 by 14. So gain for T is 3 by 14. Gain for S is 2 by 14. But who are sacrificing? A, and A is not going to retire, but A is sacrificing as well as M also sacrificing. M to is leaving, he is giving his share. At the same time, due to change this one, the A also sacrificing. So M is sacrificing how much? This is 4 by 14 and A is sacrificing 1 by 14. Do you understand? A is sacrificing 1 by 14 and M is sacrificing 4 by 14. And who two are gaining? T and S. These two are gaining. Understands? Okay. So 4 by 14 and 1 by 14, that is 5 by 14. That's 3 plus 2 is equal to 5 by 14. Now question is there. I told you that whose capital account will be credit? Here, who are sacrificing their capital account will be credit, who are gaining their capital account will be debit. Now M is sacrificing how much? M is sacrificing, this is 4 by 14. Now retirement of M goodwill is 35,000. A is sacrificing 1/4 share out of the profit. Therefore, A will receive the goodwill by the amount of his goodwill receivable by A. Now how to calculate? Now in case of M, if 4 by 14 is equal to 35,000, this 35,000 is calculated for M and this is for 1/4 share. So if 4 by 14 is equal to 35,000, how much will be the 1 by 14 for A? This is not M, this is A. Okay, that if you calculate, you will find out that 8750. 4 by 14 is equal to 35 होगा तो 1 by 14 कितना होगा? 8750. So the M will get 35,000 and A will get 8750. And 35,000 plus 8750, if you add, you will get 43,750. And this 43,750 according to the 3:2 ratio. Yes, 3:2 ratio here. 3:2 ratio. Gain by T 3 by 14 and gain by S 2 by 14. That means 3:2 ratio that T and S will give. So T will give 3 by 5 of 43,750, which is coming 26,250. T is for T, it is coming 3 by 5 of 43,750. That means 26,250. T will give and S will give 17,500. 2 by 5 of 43,750. So T and S capital account will be debit by this amount, and this is M and S capital account will be credit by this and this amount. So your journal entry is T's capital account debit 26,250, S capital account debit 17,500, to S capital 8750, to M capital 35,000. I think you understood. Let me explain one more questions from your illustrations. That is most important. I told you once again, students, very carefully, when you will do the practical sums, these are the points. Second point, how to calculate the amount of the goodwill will create problem. If you do not understand this second point, when you will do the practical sums for 8 marks of long questions, there you will feel difficult. So the steps beginning you have to understand, then we will do the complete sums. Let me do one more sums, that is illustration 12. BRT are the partners sharing profits and losses in the ratio of 3:2:1. 3:1 मतलब 6. That means 3 by 6, 2 by 6, 1 by 6. Now who is going? B. B is the first person and B share is 3 by 6. B is going, and B's capital after distribution of profit of the revaluations account and accumulated reserve and profit and loss is rupees 1,20,000. And R and T decided to pay 1,50,000 as final settlement, including the amount of the goodwill to B. R and T will decide the future profit and loss in the ratio of 3:2. Write the necessary journal entry. See, the students, one by one illustration you are seeing that something is different with the others illustration. Exactly same type of illustrations you are not getting from this one. What is the difference between this? They are telling that B, R and T, 3 persons there, 3:2:1. B is going, B is leaving, B is returning. So B share is 3 by 6. And when who is going to retire, he will get the money, final money, how much he should get, that everything will calculate, and on the basis of that he should be paid. The amount should be paid to him. and it is given that what he will get, he will get his opening capital balance, revaluations profit, accumulated reserve, profit and loss account balance, everything that will be calculated. And if you calculate, then they are getting 1,20,000 for whom? For B. But after calculating, the amount is coming 1,20,000. 1,20,000, how it is coming? His opening capital, his revaluations profit, reserve and surplus, or profit and loss account balance, whatever it is. Then, but question is there, R and T, it is decided that they will pay 1,50,000. That means 1,20,000 and 1,50,000 means 30,000 is difference. This 30,000 is given for what? Goodwill. This is the meaning of that. As final settlement including goodwill to B. R and T, you will distribute the future profit and loss in the ratio of 3:2. This is new share. Now new and this is old. So you have to find out first gaining ratio. Before passing these generalities, first you have to find out the gaining ratio. And goodwill amount, you understand, 1,50,000 and 1,20,000 is equal to 30,000. And gaining ratio, this is old is 3:1 and new is 3:2. Gain is new minus old. For R, new minus old is equal to 3/30. For T, new minus old is equal to 7/30. So gaining ratio is 8:7. 8:7 is the gaining ratio. And in this ratio, this amount of the goodwill 30,000, that is R and T's capital account will be debit and B's capital account will be credit. So 30,000 ka 8:7 ratio if you distribute, it will get 16,000 and 14,000. So R's capital account debit 16,000, T's capital account debit 14,000 to B's capital 30,000. Do you understand the questions? Once again, I want to tell you that in this second point, once again I am telling you, in this second point, accounting treatment of the goodwill, first we will calculate the gaining ratio. Formula for gaining ratio is equal to new share minus old share. And on the basis of this gaining ratio, that who is going or leaving his capital account will be debit, and who is existing their capital, who is going his capital account will be credit, and existence partner's capital account will be debit. So R is existing, T is existing, B is going. Who is going his capital account will be credit, who are existing or continuing their capital account will be debit according to the gaining ratio. The second point is over. Now we will come to the third point. Third point is coming revaluations of the assets and liabilities, and fourth point is coming distributions of the accumulated reserve and the balance and undistributed profit and losses. These 2 points, third and fourth point, I will not explain much more because same like the previous chapter of chapter 5 admissions. So this is the revaluations of the assets and liabilities. How to do the revaluations of the assets and liabilities, all of you know, and according to that we will do the revaluations account, and what of the profit or the losses is coming, that will distribute to the all partner according to the old ratio. Once again I want to tell you, revaluations account, same process we will follow. In case of admissions, whatever you have done, keep it in mind. In case of admission, revaluations account you have done, but revaluations profit you distributed to the old partner old ratio. Here revaluations profit you will distribute to old partner, all, 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 not old, all partner according to the old ratio. Same thing, there is no change at all. And in here also distributions of the reserve and accumulated profit, there is also no change for the 7th point. Same way, this is actually 4th point. Whatever you have learned from the previous chapter, how to distribute the reserve or the profit or accumulated reserve or the profit, whatever it is coming, that same journal you will find out and you will pass it. Once again I want to tell you, if it is anything is given in the liability side, that means that is credit balance, that we have to make it a debit, and all partner capital account will be credit. If it is given anything in the asset side, that is assets is debit, we have to make it a credit, and all partners capital account will be debit. So the revaluations of the assets and liabilities and distributions of the accumulated profits and reserve, that I am not telling you already. You have learned from the previous chapter. Same thing, there is no change at all. Next video I will slowly start the practical, full complete practical sums. Still the points whatever it is left according to your book, the 1, 2, 3, 4 we have completed. The 5th and 6th, the how to calculate the amount of the amount, that is determinations of the amount who is going to return that amount, how to calculate it, and last how to pay, that is payment, process of payment, how to pay and how to calculate the amount. That is practical full sum. When we will do this 5th and 6th point we will cover. So next video I will start 1 or 2 questions from your illustrations. After that we will go for the exercise. There you will understand when we will start doing the complete sum, the 5th and 6th point. Okay, bye.